Good afternoon. Welcome to the Coach's Playbook. I'm John Hoagland here with Dan the Man Hodgman and Mick the Man Geronimo for lack of another word than the man. Um, Welcome. We are going to be discussing something that is on everybody's mind these days, and that is the election and trading in and around the election. Lots of questions, lots of uncertainties out there. It is likely to be a very interesting week. On top of that, don't forget we have an FOMC meeting this week. That release will be out on Thursday. Before we really get started, though, we always want to check in and see if there's any funded trader shout outs Mick has for us. Mick, how are our funded traders doing today?
You betcha. Thanks, John. Doing well today. It's been a green day, and big shout out to my guy Juan Carlos Weiss, up $1,500 this morning, trading the S&Ps. Great guy. So happy to see him having a nice winning day today.
That's awesome.
Nice job, Juan Carlos. All right. So again, our subject today, the election and trading in and around the election. I'm going to let it go to whoever says something first.
Do you remember when we were in the office? Do you remember when we were in the office and we used to have the little books stacked up on that long table in the studio, and we would do the, who could hit the table fastest? Bringing that back a little bit here virtually. So I'll kick it off. I just want to say, election time is one of those uncertain times where the markets can be a little spooky. Anytime there's increased risk, which there is, there can be opportunity. However, this is not always the best time to look for opportunities. You have a lot of market participants, very smart, competitive market participants with big pockets that are even sitting on the sidelines themselves. I don't think it's a great time to trade. I think this is one of those times where you just sit on your hands and watch what's going on. As far as trading on if you're a shorter time frame trader or a day trader, a lot can happen. If you think back to 2016, when it was Clinton versus Trump, we had equities down 5% overnight. They finished up higher later in the morning, later that night. The close the next day, much higher. So we had, a huge percentage swing down and then an even bigger percentage swing up. These are markets where you can be dead right, but S&Ps, for example, could run against you many, 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 many points. And, in the overnight session, you're going to see the markets aren't going to be deep, very, very low liquidity. You'll see single digits on the bid and offer where you normally would see triple digits. You're going to have a gap between the bid and the offer. The market's jumping around. People are not willing to get in there and make a market, which is why you see one of the reasons why you see erratic price movement. I don't think it's a market time in the markets where shorter time frame traders should be participating. I think personally, so contradict me if you guys feel differently, but I think that these kind of events can be more opportunistic for higher time frame players, where if you have a multiple week or month or even year outlook, maybe you could find some things at a discount or sell some things that you might think get overvalued. But it's definitely something that's more opportunistic for higher time frame players who could, buy something at a discount, let that market go against them, not have to worry about it or get shaken out because they're not too concerned with the, shorter time frame and what's happening. They're looking for a bigger play there.
I would agree with you.
Dan, before you chime in, I did a couple of things I wanted to kind of go over with Mick that he was mentioning. You said that the longer term traders are likely kind of remaining on the sideline. Now they have such big positions. Instead of being really technically on the sidelines, they are hedged. They have prepared themselves for large price swings in either direction just by changing their positioning. Do you agree with that?
I do, and I if I did say that the longer time frame traders are sitting on the sidelines, I misspoke. I think the shorter time frame traders are sitting on the sidelines, and that higher time frame traders who are looking at a longer outlook are looking for potential opportunities here.
And
if you want to buy,
that's the opportunity for the higher time frame or the longer time frame, or even investors. You know, you have a big price drop. That's going to be an opportunity for longer time frame, even individual investors, to have an opportunity to look for a cheap buying opportunity. And what you said about liquidity is absolutely true. You can see it in the dome already.
Yeah,
Without
absolutely. For those higher time frame people, you know, if you think that we could see a drop in the market, but you're overall bullish, I mean, there's resting bids below the market. You know, it's going to be those higher time frame traders that I think are, you know, going to provide any potential support to the marketplace. Whereas, you know, I can't speak for all market making programs out there, but you know, it's pretty risky to try and make a market when the market's so thin. So, you know, if we do see large buying or, you know, support, it's likely people that are on a higher time frame for a longer play.
Dad used to call those wishing orders. Boy, if price gets down there, I'd sure like to buy some of those. Dan, your thoughts?
Yeah, well, so first off, I'm going to be a little realistic here and say don't go and trade this. I know a lot of people are going to want to be active. I get the enticement. I myself will be watching the markets. I said yesterday in the recap, I have pretty strict guidelines about if I'm even going to do anything. It would not be an outright. I'm covered in some sort of way, shape, or fashion, hedging positions, trading some sort of spread. I don't think you can be safe trading outrights tonight, especially the closer we get to this close of the market. Like Mick was saying, I was an options trader. Our job was we built these large positions and then we hedged ourselves to delta neutral. So that's what we've been seeing here this last week or so, are a lot of these larger traders building out these positions so that if the market goes up 10 points or down 10 points, they know how much they have to hedge themselves with. And it's not a cost to them. It's just the cost of doing business and holding onto their positions. So if it goes down 10 points, they're hedging themselves to maintain delta neutral. That's all they care about. And that's going to be the big focus for a lot of players here tonight. Now, for myself, I will be watching this. I will have my charts up. I will be excited to see action. The only way I can even consider touching something is, number one, having that extreme simplified plan that tells you exactly what you can risk, having that accountability. You have to have some sort of accountability here, because if you're willing to risk on an average day, a lot of traders can come in and say, I won't risk more than $500 today. That will go like that before you can even blink your eyes tonight. It's going to be fast, even if you're trading one contract outright. So you have to be extremely cautious here. You have to be patient. If you find one opportunity and that's it, that's still okay. You don't want to be too active here, because again, everything's going to be going on. So if you don't have the capital, if you're undercapitalized for large swings like we're going to see tonight, that thin liquidity, you're not capitalized well, this is not an environment to be trading. If you don't understand it, if you haven't been around for stuff like this, this is the largest known volatility point we're going to see probably for the next 4 years. Normally volatility comes out of nowhere. It's kind of a shocker. Like coronavirus all of a sudden just showed up and tanked the markets. Like that was a surprise. We've been planning for extreme volatility for quite some time, for today into tonight. So if you,
and yet we still tend to get our gears stripped when it happens, right?
Without a doubt, this is not regular trading environments. This is something we are not used to. Day in and day out, we are trading. We're seeing maybe a 20-point range in the S&Ps, and that's a normal day for us. 20 points is going to be a matter of seconds tonight. I mean, it's going to be fast. It's going to be extreme, and you have to be cautious.
One of the things that you mentioned is, you know, I'm old. I've been around the block a few times. You
I
guys
couldn't tell.
You guys are old as well. You've been around the block a few times. to the newer traders who are really excited about the opportunities that this volatility might bring, you have to respect the risk. You have to respect the idea that many people that are in trading now have never seen the kind of volatility. Maybe back in March, that kind of volatility they've seen, but the instant volatility that can occur when there's a headline risk or something like an election like this is going to be very difficult for even professional traders, which is why the vast majority of them are already hedged. They're going to be okay no matter what. They may be looking at levels to make executions to adjust those inventories if price gets to a certain level, but even the professionals are going to be holding back. So if you are going to play small, remember the risk is going to be much greater. You're going to have much wider stops to try and stay into some of these positions because of the lack of liquidity and other things. If you're going to play small, because if you do catch a good one, you're going to make a lot of money on that one line.
Right. John, you said something there pretty interesting to me. And I think it's important to note this. If you haven't been around this, going back to like March, when we saw that volatility, the bias, and everyone kind of had an understanding that this is going to send a huge shock into the economy. Therefore, sell it. It made sense, right? It just made sense to sell, to be short. Once we started to rebound, we started to get some stimulus. We started seeing the Fed get involved. Okay, that helps things out. Tonight, you may have this idea of if Trump is leading or if Biden is leading, this is what the markets are going to do. That's not going to be the case. We saw it 4 years ago.
You can't just start clicking.
Right. If you have a bias, you should be nowhere near these markets. If you have a bias of what's going to happen and you're trading to that bias, you should not have you have no right to be actively trading.
Yeah. I think that, as traders, we need to calculate our risk. The election night is one event throughout the year or years where you really can't, it's difficult to calculate your risk. John, back to what you were saying about, some newer traders potentially wanting to take advantage of opportunities. I've come to find for myself personally early on in my trading career, as well as, working with traders on a daily basis, many people are very focused on the making money side of the business, the offensive side, making money. It takes someone who's been around a little bit longer, or the other side of the making money is preserving your capital and playing defense. And many, many good traders out there, probably most of them, will tell you that, playing defense is a bigger part of the game than playing offense. And this is one of those events where you're better off playing defense and not risking your money than sticking your neck over the chopping block to make a buck. Sure, you could make a good amount of money in this volatility that we will likely see. You could lose a lot of money in this volatility. Is it worth it? You could make some good money being very, very lucky, or you could lose some good money being very unlucky at the same time. And you have to say, is it worth it? In my opinion, no, it's not. Not for me, at least personally.
Very well put.
Yeah, and you think about it, these big institutional guys, they're all playing defense tonight. They're not out here to make money. It might be 1 a.m. when they get the call to start playing a little offense, but it's going to be defense for a very, very long time as we await things coming in. And you got to be prepared for that. The risk is going to be great, and sitting on your hands and being patient and not putting that capital up, especially if you are undercapitalized, makes absolutely no sense to put that risk on the table. It's only one night. We have 220 some odd trading days a year.
So I'm going to calculate my risk right now. Okay. So we've got 15 ticks times the square root of pi, carry the 1 plus 16 minus 4. Here it is. No. I'm not playing tonight. I'm going to let the dust settle before I start getting involved in this.
I may be active. I'm not gonna beat around the bush. I'm not gonna tell you I won't. But I will say I have very, very, very strict guidelines and rules, and the amount of capital I am going to be risking tonight is not going to change the way I feel tomorrow if I lose every bit of what I'm willing to put on the line tonight.
But
if I trade,
you also have experience and the ability to use that knowledge to hedge your position. So,
correct. Like I said, it would not be an outright thing. There's no outrights that there's nothing small enough, even the micros, to be outright in that. I just don't see, it doesn't make sense to me. It's gambling tonight if you're trading some sort of outright. So you have to, if I'm going to have to do some sort of hedging, I'm going to be managed. If I even do anything, again, I may not do anything. But if I see an opportunity present itself, I'm not going to say I won't take advantage. I won't do something.
How late are we going to be up tonight watching this? The results come through on the TV. Are we going to get results tonight?
We have no idea. Maybe days.
Yeah.
It could be one beer, 2 beers, could be days full of beers before we find out.
Well, I did just pick up a 30-pack of beer. The 30 packs they're well stocked at the store up here by the house.
That's important.
Yep. Awesome.
Right. I think this is a great session. I want to give a round of applause to all of you.
Hey, I like that. Where'd you get that, John?
I got some like sound effects on my phone. I thought that would be kind of fun. So, nice job. So that's going to be about it for us. Dan always has something very interesting and inspirational for us at the end of these coaches playbooks. Dan, what do you have for us today?
So I don't know who this came from. I saw it on social media this morning, and I thought it was a good one. No matter the outcome, we are all Americans, and we are all in this together. So keep that thought at the end of the day. Whoever wins, whoever loses, we're still all in this together.
Very nice, Dan. Thank you very much. And thank you all for joining us. I don't know if we have any questions or thoughts.
No, just a few comments. Hellos from Brendan and Felix, and then Quantum Vortex Energy had some things to say about the Constitution.
Okay. On that note, get out there and profit. Trade well, everybody. Be careful tonight. Watch the fireworks. Opportunities are always around us. We don't have to put ourselves at great risk to get these opportunities. Trade well, everyone.
John, I thought you were going to change your punchline from get out there and profit to get out there and be safe.
Yes, well, be safe.
You did follow up with that. I thought I would have lost some money on that thinking that you were going to change it.